Hey there, folks. This is Deeksha Janiani representing Team Trendline. And in this week's video, we will analyze the portfolios of superstar investors Rakesh Jhunjhunwala and Sunil Singhania. We will also take a look at how their net worth has multiplied in the last 3 to 5 years. And further, we will take a look at their new sectoral bets and the sectors in which they are reducing their exposure in Q1 FY23. So let's get into it. So Rakesh Jhunjhunwala is called the Big Bull for a good reason. His portfolio value stood at 31,066 crore as of August 1st, 2022. And if you look at at his portfolio structure, it is weighted towards apparel and accessories as well as the banking and finance sector. His top holdings are jewelry maker Titan Company and insurer Star Health. He also happens to be the promoter at Star Health. Further, if we do a sequential comparison of his portfolio to understand the change quarter on quarter, we can see that the top sectors still continue to hold the leading positions within his portfolio. However, the share of textiles and accessory in banking and finance have slightly reduced, owing to the 20% plus correction in the prices of Titan Company and Star Health. As a welcome surprise, the share of auto sector and retailing sector have risen quarter on quarter in the June quarter. So Jhunjhunwala added a new auto stock to his portfolio, which we will talk about later in this video. And there is a small story behind the rise in share of the retail sector. So Jhunjhunwala's top retail sector bet is the footwear major Metro Brands. Now, the thing is, Metro Brands suffered only a 2% price correction between March end and June end, whereas the portfolio of Rakesh Jhunjhunwala actually fell 20% quarter on quarter to 25,200 crore and over in as of June end. And so basically, what happened is Metro stock value is at a similar level. However, the portfolio size has fallen, thereby increasing the share of the sector in his overall portfolio. So that's what happened. Now, interestingly, the stock price of this company rose 23% from June end till August 1st, owing to its stellar Q1 FY23 results and a healthy outlook. So, folks, can you guess how much the Big Bull made additionally in this 1 month on just this one stock? So let me tell you, he made a whopping 542 crore in just 1 month on just this one stock. In comparison, his biggest bet, which is Titan Company, earned a lower net profit in the quarter. So Titan Company actually made 510 crores worth of profit in Q1 FY23, which is lower than what Big Bull would make on one stock. So yeah, you heard that right. So moving on, if we notice the trajectory of Rakesh Jhunjhunwala's net worth over the years, we see that his public net worth actually rose 3 times between June 2020 and March 2022, thanks to the bull run. So another thing that happened is his key bets like Metro Brands and Star Health and Allied Insurance got listed on the bourses, which also added considerable value to his portfolio. If you see the 5-year trend in his portfolio, it has grown at a CAGR of 23%, comfortably beating the Nifty 50 index returns of 13% in the same period. Yes, that is right. So moving on, let's understand the key buys and sells of the Big Bull during the June quarter. So the Big Bull reduced his stake in real estate companies like India Bulls Real Estate and DB Realty. So he already had a very lower share of his portfolio exposed to the real estate sector even in the March 2022 quarter, and now that share is below 5.5% of his overall portfolio. He may have also exited the metals and mining sector completely in the June quarter. So Rakesh Jhunjhunwala had acquired the National Aluminium Company back in September 2021 when the metals rally was underway. So now this company, Nalco, basically touched a 52-year high in April 2022, only to lose 45% of its value because metal stocks took a beating in the market. Yes, that is right. So, other than these stocks, the big bull also cut his stake in the media company TV18 Broadcast. So, TV18 has lost half of its value ever since it announced the investment of Bodhi Tree Systems in Viacom 18, its joint venture, back in April. And this event might have caused Jhunjhunwala also to pare his stake in this company. However, the stock sale deal of Jhunjhunwala remains in the casino company Delta Corp. He held shares worth 660 crore in this company back in March 2022. So this company, if you notice, had started losing value ever since it declared its Q4 FY22 results back in April. And if you see the revenue and net profits level in FY22, they were far below the pre-pandemic levels. And see, Jhunjhunwala actually started selling stake in this company only in June, after the stock had already lost 34% of its value. Interesting, isn't it? Yes, that's right. So, moving on, Jhunjhunwala bought only a new stake in only one company during the June quarter, which is his preferred tractor maker, Escorts Kubota. So he had actually materially reduced his stake in this company back in the March quarter. It looks like the big bull is bullish on the demand recovery in the rural India, backed by a normal monsoon season. However, a fact of the matter is that Escorts actually saw its July wholesales fall 45% month on month. Yes, that is right. So let's move on to another superstar investor with very different profile, which is Sunil Singhania. His Abakkus Fund's portfolio value stood at over 2200 crore as of August 1st, 2022. If you look at his portfolio structure, it is very well diversified among sectors, with information technologies and metals being his top bets. Within IT, Mastec and Root Mobile are the leading biggest positions that he holds, and within the metal space, it is Jindal Stainless Hisar, which is his leading position. So his top six holdings, if you notice here, have lost, and especially Mastec and Jindal Stainless have lost, material value between March end and June end. So, because of these price corrections, what has happened? The share of IT and metal sector within his portfolio has reduced quarter on quarter at the end of June quarter. Yes, that's right. And on the other hand, the share of cement and construction has risen in his portfolio. So, Singhania actually added a new, construction stock, namely J Kumar Infra Projects, in this quarter, which partly resulted in this share rise. And the share of banking and finance sector also rose above 5% within his portfolio, as he added a new cash management company, namely CMS Infosystems. So if we look at the trajectory of his public net worth, actually jumped 7 times between June 2020 and June 2021. So he actually added many new positions like Rupa and Company, Root Mobile, Acrisil, Saregama in this period. So the market bull run propelled the value of these stocks and the other positions that he had. So I'll give you an example. So Saregama actually saw a stock price rise of 7 times, and Mastec saw a rise of 5 times in just 1 year. So you can make a sense of why his portfolio is just shooting up. However, after June 2021, his portfolio has more or less remained in the 2000 crore bracket and has not scaled any new heights. So moving to his new buys during the quarter. So Singhania had he already had some stake in the defense company Paras Defense, and he had also bought additional shares of this company back in 2021 during its IPO. And he then went on to book his good listing gains in the next 2 quarters, and his position actually fell below 1% in the March quarter. Now he has again picked up some good stake in this company. So see, government is very focused on manufacturing the defense equipment of the country within domestically. So that might have prompted Singhania to reconsider the stock. Other than this, he also picked up luxury watch retailer Ethos during its IPO in the June quarter. Another superstar investor, Mukul Agarwal, also picked up a stake in this company. So the healthy sales trends being witnessed by the retail sector ever since March 2022 might have prompted these investors to pick up a stake in such an expensive stock as well. So moving on, see, the building products sector is actually a proxy play on a broader residential market. And because see, building products are they derive their demand from construction of new homes. And if you see the recent buys of Singhania, this space particularly stands out. So he bought a fresh stake in laminates maker Stylam Industries. He also added additional stake in bathware and sanitary ware maker Hindware Home Innovation. Other than these, he also raised a stake in innerwear maker Rupa and Company. And this is despite the fact that Rupa and Company was facing challenges in terms of higher cotton prices and its CEO resigning back in the March quarter. Yes, that's it. So coming to the sales of this superstar investor, he has gradually reduced his holdings in music label company Saregama and FMCG player ADF Foods. So see, ADF Foods caters to the American ready-to-eat and ready-to-cook market. So it might be possible that Singhania is bearish on the consumption story, especially amongst the Indian diaspora staying in the US. And as far as we talk about Saregama, it has seen a spectacular run at the markets. Between June 2020 and December 2021, it signed new licensing deals with Facebook, Instagram, and Spotify, which re-triggered the stock. However, valuations have run ahead of its earnings growth now, which might have prompted Singhania to book profit on this counter. So I hope, folks, you must have gained some insights on the new bets of the superstar investors and the sectors which might outperform in the coming in the near term. So that was my time. Thank you so very much and have a great day.